Oh boy, here we go again. Back to work tonight, guys. Tuesday is behind us. Time to get ready for Wednesday. It's the first day of February 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Wednesday's trading session. I got a great video in store for you guys tonight. Lots of great trades on our radar for tomorrow. Got some really big moves on the E-minis once again. The earnings this afternoon sent markets racing higher. Got a bunch of great trades, buying pullbacks, maybe a reversal on the E-mini and the Nasdaq tomorrow. Oil, I'll tell you, oil has a really nice short setting up right now, but I'll tell you, there's some definite traps on the oil market. I want to make sure you stay out of trouble on those tomorrow as well. Lot to cover tonight in this video. Before we jump in and get our hands dirty on these charts, as always, make sure you subscribe to our YouTube channel. I publish the good stuff right here on this YouTube channel every evening. Don't miss tomorrow night's video. Hit that subscribe button, hit that little bell icon, because a lot of this stuff is very time sensitive, right? Also, if you guys have any questions for me, drop those questions in the comment section. I would love to answer any questions you might have along the way, and I really appreciate you guys carving out some time late in the day here on a Tuesday. If you enjoy the video as much as I enjoy making it, hit that like button for me here. I appreciate you guys spending some time tonight to watch this video newsletter. But let's get this intro out of the way. Wednesday is not going to trade itself. What is the game plan for tomorrow? Well, as I mentioned in the introduction, big moves here. Again, we had some earnings reports coming out after the close today. The Nasdaq, of course, was the kind of the focus of those earnings reports. But you can definitely tell the S&P kind of jumped along for the ride as well. So we got a lot of bullishness in these markets right now. We get some big ranges overhead that we talked about in last night's video that are acting as a magnet right now. And, I'll tell you right now, and this will be somewhat similar to the game plan from last night. Anytime we see this much strength in one direction, we know we want to find those buy zones, wait for those deep pullbacks, and retest the high. Now, I can also see a couple reversals off the high as well. So we'll talk about tonight how to tell the difference between a deep pullback and a reversal. We'll talk about how to trade with some ranges tomorrow, and what if we keep on grinding here as well. So there is no shortage of good trades setting up on the Nasdaq and the S&P. And also to oil, right? Got a really nice, we got a range below us right now on oil. One big range right now on the crude oil, right? We got resistance overhead, we got support below. There's a great short setting up here right now off the high. The one thing you're not going to want to do though for tomorrow is chase this thing lower, and I'll talk about why I say that in a moment. So we're talking the short side here on oil. You know me too. You know me. I'll make sure we cover all the buy side too. We'll talk about how to buy it off the low. We'll talk about how to buy it right as it breaks out. Remember, I'm a trader. You're a trader, right? We're not in the prediction business. We'll trade whatever the market gives us tomorrow, and I'll make sure by the end of this video tonight, you have a nice roadmap to follow. We'll know where the best trades are for Wednesday's trading session. Speaking of Wednesday, though, let's make sure we touch base on the schedule for tomorrow. There really isn't a lot for us to worry about here tomorrow until we get to that oil report at 10:30 Eastern time. So the crude oil futures obviously will be affected by this oil report tomorrow. What I always do is I always give it at least a 10-minute buffer. So the news is at 10:30, so 10:20, usually about 10:15, 10:20, things start slowing down on crude oil. So we'll sit on hands until about 10:40, right? 10:45, and we'll finish up the morning once we have that news out of the way. I don't anticipate this OPEC meeting to have that big of an impact right here for tomorrow. We usually don't hear anything from OPEC till the following day, so we'll talk more about that right as we go into Thursday's trading session. Don't let this employment number fool you. This will likely not be a big event here for tomorrow. It will be used, though, as a leading indicator for Friday's non-farm payrolls. I think, in my eyes, the big news tomorrow is that petroleum status report, which again only applies to crude oil. At this point right now, we're listening in from Fed speakers and a lot of stuff going on right now that's kind of unscheduled news. We heard about the Iranian the nuclear deal today. We had a lot of different chatter about different things here. So we'll be keeping our eyes open on unscheduled news headlines coming out tomorrow. But as far as I can see on this chart here, the only thing we got to worry about as far as major news, kind of grenades hitting the market, is that 10:30 oil report. So nice, clear, wide open session for us tomorrow. And I'm pretty excited for tomorrow's trading session in our trade room. Let's get back to our charts, though. Let's get back to our charts. We'll worry about the bigger stuff coming later on in the week. S&P, Nasdaq are both bullish and ripping higher here. Crude oil, of course, is just a kind of a nasty, nasty range here. Let's jump into the S&P first. Let's take a look at that one first. And this is going to be a little bit similar to what we talked about last night, right? So, what are the most important kind of components on this chart right now? Well, first of all, there's a range, right? There's definitely a range. So the buyers have control right now, but the sellers would love to go right back down into that trading range, right? That is one very big factor on this chart at this point. Now, second piece, right? Second component is the strength of this move, right? The strength of that move. Anytime we see a real strong move in one direction, we know the odds are pretty good they're going to get a pullback and a retest of that high. And then I think it's worth mentioning here that the lack of any pullback, really, right? This is very much just kind of a panic buy up, right? Like a short squeeze almost, or FOMO buy, right? It's almost like nobody, it's almost like they were running out of contracts and get it before it's run out. Kind of a panic buy up there. So think about it. If you're coming in tomorrow and looking at this big move, the first thing to think is I don't want to buy way up here, right? So you have to think that with such a big move like this, without really any pullbacks to allow buyers, obviously faster time frames, there were channels here, right, to buy that first test. But we come in tomorrow, you got to think, just like we talked about in last night's video, you got to think that with a big move like this, either a really deep pullback is very likely or a trading range up here, right? Like we saw today. So I would definitely anticipate somewhat similar of a game plan that we talked about in last night's video. So what do buyers want, right? What do buyers want? Buyers want to buy the dip, right? They want to buy the dip, even if it keeps going higher. They want to buy the dip right now, right? What do sellers want? The sellers would love to get this either to double top and short the reversal back off the high, right? Kind of like that, right? Up, double top, short the reversal back down again. The bears would love to get this right back down into that trading range here. As you can see here, we got a pretty easy breakout leg is the measuring leg. We can definitely see where these buyers we're trying to get to here. So look, again, pretty straightforward here. The key right now is we really want to get a nice deep pullback, right? So how do I buy it? How do I sell it? Let's talk about some of the long trades, some of the short trades, some of the stuff that I'm watching here for tomorrow. First things first here, I'd like to get a relatively deep pullback. And most of it is just to attract enough buyers, into this market right now. I would love to get all the way back to this 14.5 area, but it's probably not going to be a bull market by that point, right? If we make it all the way down to 14, 14.5, 15, that's probably going to be a bear market at that point, which won't be a bad thing. There'll be plenty of selling setups if we end up back to that 14.5 level. But for right now, I want you to think about two basic types of situations, and we talked about these last night. I'd like to get that nice deep pullback. I'd like to get those bears to come in and try to short this down right into that trading range. Now, whenever we look for a deep pullback, there are two types of pullbacks I like to look for. One is called a two-try failure, where we let the bears try twice. We pinpoint those stops, and we look for signals to buy into those stops. Remember, anytime we see a big move in one direction like this, they're going to want to go back and retest those highs. This is exactly how I'd like to buy that deep pullback. Now, remember, if we get that deep pullback, think about where that trap will be on the way back higher. You want that trap, right? You want that trap. That trap is going to be where the money is, because you're not going to want to buy very high, right? So we had a deep pullback, right? Let's sweeten the deal. Let's put some meat on the bone for these buyers right now. A little bit too big of a move to be trying to take shallow pullbacks right now, right? If it's a shallow pullback, it's going to probably turn into a range. Okay, we'll talk about that in a moment. So two-try failure pattern, right, into a trap setup on the way back up to retest that high. Here's another one that you want to keep in mind here, and this will also apply to the NASDAQ as well. What if we bounce off the moving average? Right? If we bounce off the moving average, now there's a trend line coming down. Okay? This is a really big, these are very, very common whenever you see a really big move and it requires a bit of a deep pullback, right? The aggressive buyers are going to come in and buy that a little bit too early. The market will take off to the downside. Draw that trend line down, right? Now get up and over and use that trend line as an area of support. Right? We call these two-legged pullbacks, right? Or 2LP, right? Or 2LP, okay? Those are two of the pullback patterns I'm really looking forward to here for tomorrow. And again, they're very similar to what we just talked about in last night's video. Now, at what point does the pullback turn into a reversal? Well, this whole thing higher is, for the most part, fueled by fear of missing out and probably the earnings reports that we saw yesterday. So I wouldn't be surprised whatsoever if by the time I get back to my desk tomorrow, we've already come pretty good off these highs here. Here's what you want to look for as far as a reversal goes right now. There's actually three ways I would look to sell this market right now. One of them is kind of the easy one. It's the 1, 2, 3 reversal. Okay, 1, 2, 3. Now remember, we're looking for the buy once those bears try and fail here, right, with that two-try failure. But if the sellers are successful and if they can really jump off the moving average, remember, it doesn't matter how strong the pullback is. They have to hold that pullback and run it lower. Okay, we may see this thing really pull back deep, right? And then, of course, at that point, the bears are trying, and we snap right back up again. Okay, don't fall for that trap right now. If we get that deep pullback, great. That's one part of it. Wait for the bears to come in and hit it, right, as it runs lower now. Now, find that new trend line. Mark up that new channel. Look left and find some prior swings. That's usually where the easy money is. And what you want is you want that first touch of the high of that channel, right? These will oftentimes be trap setups or failure setups or pullback setups off the high of that channel, right? You guys have all learned this stuff in that free trading course, right, we took before, right? You guys know those entry patterns before. And remember, I know a lot of you guys have already grabbed the free quick start course and learned the entry setups. If you haven't taken that quick start class, what are you waiting for? Definitely grab it. I'll put a little link up there for a little pop up there for you in the upper right hand corner. Inside that free trading course, not only will you learn all the entry setups we're talking about tonight, all the rules for it, but you'll learn where to apply them and, most importantly, when to ignore them. Because that's the key to making money. We can find our way into winning trades. The key is knowing which trades to skip to avoid the losses. I'm going to cover the whole roadmap in that free trading course. So if you haven't grabbed it yet, definitely grab that. Pause the video, grab it right now, and then check your email once you're done for the welcome email. So that is the reversal, right? The 1, 2, 3 reversal off that high. And then again, it'll be one of 3 of the entry setups we talk about, right, in that free trading course. Now, where's the target on that short? Remember, the first leg is almost always equal to the the third leg, right? It's almost always, right? In this particular situation. Okay, so the size of that first leg down. Now, again, we know where the market wants to get to. It wants to get to the range, right? But remember, this will really help you fine tune that final exit target. Now, here's one more way to sell this thing short. Let's say, for example, we do get the pullback. But now, instead of going up and blasting off the low, what happens starts to grind. Okay, this is likely in a situation like this because easy come, easy go, right? Obviously, we'll wait for the proof of this, right? But let's say it starts to grind down here. If it grinds down, that's basically evidence of a reversal. It's not very convincing because it doesn't jump off the moving average. But if it starts to grind down, though, that's a reversalist point now. Now, here's the kicker. Mark that trend line nice and tight. bring it right up at these big highs, the big highs up there. And again, look left, find that channel, find those swings, your traps, your failures, your pullbacks, the stuff you learn right in that video course, right? And then in these scenarios, oftentimes, right, that first leg is really big. Right? So first leg's really big, second leg's really small. Remember, it's that first leg, right, that'll be used as your measuring leg, right? As we always say. Here's one more way to sell this puppy, right, off the high, and that would be a crown reversal. And there's two ways you can use a crown reversal. One of them, which is the most reliable, would be to wait for the buyers to come back, retest that high, right? We buy off that low, we buy it, we take our profit back up at the high, and now we've kind of, as we always say in the trade room, we've now finished the objective, right? When you see a big move up like this, the buyers want to buy low and retest the high, right? That's kind of mission accomplished. Once they, quote unquote, accomplished their mission now they have to keep it going. Right? Because if they can't keep it going, now this area right there becomes a big, big target for the sellers. Okay, so at this point now, we're still very bullish, right? So I can't just sell into it. Now we implement the 2-try failure with a trap. 1 try for the buyers, 2 try for the buyers. The money is either in the trap off the high or mark up that low, right? Mark up that high and then look for that signal coming off that high, okay? Then don't forget, don't just kick your feet back on the desk and bask in your glory, right? Once this thing drops, now we take action. Now this range below us is a huge target now. Now find that new low, find that new high, find that swing, drill down to your faster time frame. This is an 8,000 tick chart. We are not trading 8,000 tick charts, right? Drill down to your faster time frame. Grab your signal, trap, failure, pullback. Again, you'll learn more in that free course, right? So again, I'm looking for that short, right? We run up, we buy. Again, this could easily happen. We buy the pullback, we retest the high, and then 1, 2, dump it back down off those highs, and then again, grab that first test, the first test off the low or the high of that channel. In this scenario, where's the target? We know where they want to go, right? It's this leg, right? It's that leg. That's your objective right there. That's your measuring leg, right? Those are a handful of ways you can short this. Now, a little more aggressive, right? A little more aggressive would be apply that same thing right now, right? So now we don't go lower and pull back, right? Now the buyers try once. The buyers try twice, right? I mark up that prior swing, right? Now I know my trap is. I mark up that channel. One of my favorite techniques is to draw that trend line off that low, right up at that high. Now, nice strong signal. They dump it off the high, right? This one is a little more aggressive, right? Because we haven't retested yet. We haven't finished the objective. And so what I always tell my students in trade room is that this one usually requires a larger 2-try, right? Remember, the stronger the move, the larger this reversal pattern needs to happen just because momentum is so strong, right? So I have to be a little more patient on this one, find that trend line, find that channel, right? Hit that trap and go, right? But if I get it pulled back, retest, see now I can be a lot more aggressive on that short right there. Does that make sense, right? Once they retest, then a marginal example of that setup will work, right? But I really got to be on my best behavior here to time the reversal on this before the retest. Does that make sense, guys? If it does, hit the like button for me. Give me a thumbs up. Let me know if it doesn't, right? In the comment section. Now, if we go sideways, all right, I'm going to talk about the range of the NASDAQ because the range is probably most likely in the NASDAQ for tomorrow. You'll see why in a second. So if you want to learn the range trades, right, make sure you stay tuned for the NASDAQ here. And we'll also cover if it keeps going higher on the NASDAQ as well. All right. So what if it keeps going higher, right? What if it goes range bound? Let's cover that in the NASDAQ, right? We got a lot of the bases covered in the S&P. Right? But rather than, repeat myself over and over again, right? Let's go to the NASDAQ here. So pretty much everything I've talked about on the S&P can apply to the NASDAQ as well. The NASDAQ, we'll cover a few more in the NASDAQ here that can also be applied to the S&P. Okay, most important factor right now, we have a range. That range, of course, is a magnet, right? The bears would love to come right back down into that trading range. Okay, what else did we see? A tremendous move higher, right? And not just a strong move, but a huge move, right? In fact, they went all the way through, as you can see here, they went through the measured move all the way to the runaway zone, right? Look back at the S&P, right? The S&P didn't even get close to the runaway zone, right? It went to the measured move. It's fine. But remember, whenever we go too far, you know, and this term, we have to use this term loosely because we don't decide when the market's gone too far, right? We don't decide that. The market decides when it's gone too far. But typically, right, when I see a breakout like this and just keeps on melting up, right, like it's on a string right now, you got to think that buyers are going to look at this and say, okay, I want to buy, but I'm not going to buy way up here, right? If I buy way up here right now, there's a good chance we pull all the way back like we saw today, right? Remember, this was that big move up yesterday. So they got to get that pullback, right, and attract those, right, to attract more buyers. Same thing we talked about last night is really very much in play here right now. So we definitely are expecting a deep pullback here. We're also expecting a range up here. You know, I think a range is very likely because in my trade room, you know, measured moves are great. When we get that runaway zone, that's usually when things have, you know, again, quote unquote, gone too far. Expect a range or a really deep pullback. So again, same basic idea here, right? Same basic idea as we pull back right now. Do we bounce off the moving average and go lower? If that's the case, get up and over and use it with that two-legged pullback. Do we just simply straight pull back, right? Nice deep pullback here, profit taking off the high. The bears come in, try to sell it. Let them try once. Let them try twice. Once they try twice, all those stops, right? They're hanging out right above that high, right? One of my first mentors always told me, right? He always used to say, Joe, the easiest money you're ever going to make in the market is when you're getting in when the other side is in pain. That's the easiest money you're going to make. And so you think about it, if the bears are trying to short this thing back into that range, which I can easily see why somebody might try to do that, it's just the problem is we have so much momentum here for these highs. Remember, deep pullback, two try failure into that, right? Into that trap. Right into that trap. That's where the money is. If you happen to miss it, or like I'll usually do is try to add to it. Right. Look for that add-on right there. Where's the objective? The objective is back up right to that high. If this market pulls back, right? If they hold that pullback and jump, okay, just like in the S&P, we drill down, we find that channel, we hit that first test. You know, again, could be a trap entry, could be a failure entry, could be a pullback combination. You know, again, I know a lot of you guys have taken the free course. You know what those entry setups are, but if you haven't done so yet, you better make sure you grab that free trading class, that quick start class, because it'll give you the roadmap to follow every day. You know, having a system to follow every day is just it's the key to confidence, and confidence allows you to succeed by pulling the trigger when it's ready. Okay, so we know how that reversal works, and again, if it kind of rolls lower and starts to grind, right? We grab that low, we grab that big high, right? And we wait for that first test. If I can get above a prior swing, it's a great trap. If not, failure pattern, pullback pattern. You'll see hundreds of examples of these from markets like the Nasdaq inside that free course I mentioned earlier, right? So it's got some pretty easy, you know, shorts on this if we can get it, right? Do we get back up, double top off that high, right? With that 1, 2, and reversal back down. Find that new channel, right? And then hit that first test, right? Do we get the long, buy it back up, take our profit at the high? The buyers are unable to go through the highs now, right? They try once to keep it going. They try twice to keep it going. Nope, not happening. Short that sucker, right? Mission accomplished. And then drill it down, find that, right? Find that new channel, right? Find your entry on the faster time frame. Or do we see this thing pull back right now? Does it pull back here right now? Try once, right? Go higher, try twice. Remember, the stronger the move, the bigger this two-try failure needs to be, right? At that point now, trap higher off the high. We rock it lower, find those swings, find that channel, and grab that first test, right? Because after all, the first test is always the best test, right? So nothing new there, right? Nothing new there. I'm literally repeating almost verbatim what I just said on the S&P. That's why I moved pretty quickly right through that. Okay, so nothing's different there than on the S&P. Now, what if we go sideways here? All right, I'm going to get rid of the runaway zone because at this point, it's pretty much irrelevant. Let's say, for example, now we go sideways. Very likely, right? Very likely. We end up going sideways here instead of a range. Okay, what do we do with a range? What are ranges? They're magnets, right? They are. They're magnets. So what do? You go out, you find levels of support. Okay, now there's a couple different ways I like to look for support in a bull market into a trading range. The first thing is the simple size of the range, right? Once we know how big this range is, I'm going to use that as almost like what we call range expansions, and that will tell me kind of where to look for the entry. Okay, we'll know more of that. And by the way, guys, you're going to learn all this stuff. You're going to learn a lot more of the smaller details inside that free course, right? So you find those range expansions underneath. Another way I like to use ranges is to look for triangles, right? So I draw trend lines off those lows, right? Bring it down. What I'm trying to do is I'm trying to find support levels below the trading range, right? So I'm finding triangles, range expansions, okay? The multiple of the range itself, prior swings, trend lines, right, coming up, right? Trend lines coming up, okay? We're looking for those support levels below the trading range, okay? It'll be just like we saw today, right? If the market goes sideways here, find those support levels, right? Find those triangle levels, get down and buy it back up into that trading range, okay? That's the goal. So if we go sideways up here, we find levels of support below the range. Could be triangles, expansions, trend lines. We wait for the pullback. Eventually the buyers are going to run out of bullets. Okay, that's what kind of creates ranges, and then we get that pullback. Once they run out of bullets now we run into an area of support. Okay, don't pick a bottom on this. Picking bottoms is just really difficult to do. You know, sometimes it goes lower and you're like, oh, I'm going to buy it. It'll come back, stop you out, and run without you there. So I don't pick the bottom. I wait for the bears to come in and try to sell it short. Once those bears try to get short, again, think about where their pain is and buy right into their pain point. Okay, now, one more trade on this, right? It's a failure and then trade the turn. Okay, trade the turn. The goal of this is to find an add-on entry before we reach the other side of that range. Okay, that's the goal. All right. So again, we pull back. We trap in those bears, right? The bears trying to sell short. We trap in those bears. Why? Because the range is a magnet, and we're foolishly bullish, right? We're hella bullish, as the kids say here on the West Coast, right? We're very bullish. That range is a magnet. So we trap in those bears. We're gonna back up. Then find that new channel. Right? Find that new channel with those highs and grab that. Now, obviously I can't, predict what setup's going to be here, but grab that bear trap entry. Grab that failure entry off the moving average. Grab that pullback combination. Okay? These are easy ways to add to your position, or if you don't grab the failure, right, grab it there. The key is, though, you want that follow-up trade. You want that follow-up trade before we reach the other side of that trading range. Okay, I'm okay being inside the range, but remember, the objective is to retest the high, right? So if it goes up like this, sorry about that. If it goes up like this, right, we go down, get that failure here, right, and then up, right, and then up like this. Just be aware that's going to be a dangerous trade, right? It's not going to be a very reliable trade right there. Okay, you want to get to before we retest that high, right? And then where's the target on the other side of it? The target is the pendulum swing. Okay, the target is the pendulum. So if we go sideways, I apologize for repeating myself, grab that failure off the low, right? We grab that pop up and we trade the turn. Obviously, all this in a faster time frame, and we run it higher here. Where's the objective? Target 1, always, other side of the range. Target 2 is the pendulum swing, right? That's your next objective. All right, and you're going to see right away here how important the pendulum swing is when we get to the oil chart, right? Because the oil was loving on the pendulum swing. Okay, that's our second target as we go higher. All right, guys, those are the two ways you want to trade that range, right? Buy that failure, grab that first test off that channel before you get back to the other side of the top of that range. Leave that runner, right? Leave that runner for the pendulum swing. All right, we're looking pretty good there. What if we keep going higher? What if we keep going higher here? If we keep going higher, and again, all of this stuff will also apply to the S&P 500. If we keep going higher, we pretty much have the same thing, right? If we keep going higher here, not a lot changes. We talked about this range we have overhead. We talked this last night, right? There's a big range up here, 15,300, right? 175 there. Those are obviously the highs and lows of that trading range. If the market was, it's pretty unlikely it happens, but again, there's this kind of feeling in the market right now. There's a possibility this thing goes back to all-time highs again, right? As if these last few weeks have just been a fluke and a really deep pullback. I'm not saying what's right or wrong. I'm just saying there definitely is a kind of FOMO feeling to a move like this. So don't be surprised if it keeps on, grinding higher. Now, what do we do if it keeps on grinding higher? Well, if it was back here and grinding higher, right, I would say grab a really tight channel and buy that first pullback, right? The problem though is we've gone again, quote unquote, too far. So if it keeps on grinding higher here, don't get me wrong. I mean, I would grab the shallow pullback early in the move. When it's late like this though, what I'll do is I'll just keep on adjusting that channel, right? And really what I'm trying to do is what I really want is that the channel's great. But really what you want right now is you want to get that nice deep pullback. Again, get me underneath that channel. Get me underneath it. Really rope in those bears with that 1, 2, hit them right where it hurts there. That's where the big money's going to be, right? Really getting that deep pullback. That those bulls, of course, want to retest the high. So if it keeps on grinding higher, really not a lot changes. I'm still going to keep an eye out for a range. I'm still going to watch out for a deep pullback or a two-legged pullback, right? As we talked about many times already. And I'm still going to look for that pop up, maybe that reversal and that grind, right? To find that new short off the high. Nothing really changes if we push higher. Besides, I'm really now waiting for a really deep pullback off the high, right? Give me some meat on the bone, right? Don't maybe pick up the leftover scraps up here after Google's completely smashed its earnings after the close of today. All right, guys, a lot of good stuff in the NASDAQ for tomorrow. We'll see if we get a range. We may see a lot. We may see something similar that we saw today, right? Where the market steps down, right? Steps down, that up and over, right? That may be what happens on the NASDAQ. We will wait and see what we get. But at least now you get a pretty good plan of attack there if you're trading on your own tomorrow morning. How about some oil? It was not a pretty session on the oil today. Oil was a pretty wild session, but there was definitely a lot of sense though that it made here. We talked about in last night's video how there was a big pendulum swing up here. Right? This is a different range, by the way. Pendulum swing, right? We're up around the pendulum swing. And we talked about how it was probably going to produce that move back down. Exactly what happened, right? So the market dumps off the high here. Most important thing, let me back things up here. What's the most important thing right now on the oil? It's the range, right? It's the range. If you put a volume profile on this thing right now, there's just, it's all piled up. It's a little bit more bullish, I'm sure, right? But it's all piled up there right in the middle. Anytime we see a range on the chart, what do we know? We know the range is a magnet. And most importantly, we know that ranges love to rotate. So as the market rotated lower and then ran back higher, it's pretty easy once you know how to find a trading range to find that pendulum swing. Okay, and then of course, some poor buyer up there just walked right into that pendulum swing thinking, oh, it's a breakout. Well, it probably was a breakout. It broke out right at the pendulum swing. And of course, it collapses back down. This pendulum is a really big factor. Not this one. Well, this one is a big factor, but more importantly, this pendulum over here is a very big factor. I'm going to talk about why I say that here in a few moments. So the range is a really important part of this, right? Second part. Big, strong run higher. So what it looks like is happening right now is again, they completed the pendulum swing. But look at the strength of that move, right? Look at the strength of that move. So this is kind of like the inversion, right? The flip of what we're talking about on the S&P and the NASDAQ. It's a huge move up, right? So what do you want to do? You want to wait for that deep pullback. Well, of course, right? When it's a deep pullback, of course the bears are going to go, oh shoot, we're going lower here. They try once, they try twice, and everybody's trying to buy it right back up again. Right? So buyers are definitely in this right now, and I assume they're trying to retest that high. Okay, that's actually a pretty good thing for us because hopefully they'll keep on running this thing higher. They'll take out that high, and then you see this trend line. Now, I wouldn't normally draw the trend line like this. If you know my style, I would always draw that trend line like this off the first two swings. But I mean, come on, how do you look at this chart and not go, well, obviously they're using that trend line right now? Not my typical way of drawing it, but I think this trend line is a very, very big part of this because again, strong move up. Anytime we see a strong move in one direction, we know now with a range, it's probably not as likely, right? But it's obvious right now. The bears have tried a couple times. They're trying to retest that high. If they can get up there, let's get underneath and let's use that trend line, right? That's going to be the strong move. It kind of helps explain this process going higher here. That trend line is really going to be your best friend here for tomorrow. The bears would love to get this thing back down again, and I think they're going to try to get this thing off of that trend line. Now, I mentioned earlier, you're not going to want to chase this thing going lower, and this is why. It's very tempting right now to think, you know what? This is the big pendulum swing. Right? And it might be for tomorrow. It definitely might be, right? The bears want to go all the way back to basically retest that 86.55. What I've learned over the years, though, is that once we go back into that range and we push higher again, now we apply basically a new pendulum to it, right? Once we go back into the range, if this thing doesn't keep on going, right? Then we of course go up. This pendulum now is very, very important. So really, in all reality, this area right there, that area right there is where I've got to be. I do not want to be shorting into that area. Okay. Here's another part of it, right? So again, we talk about the range, right? The range is a big part of it, right? The strong move up is a big part of it. Okay. The trend line is a part of it. Remember, this whole market right now is just one. Look at this thing. Look, it keeps going forever. Right? It's not the biggest range we've seen, but it's pretty darn big. We saw a range on gold end of last year that probably has the Guinness Book of World Records if they still keep those things, right? For the world's biggest range. But that's a pretty darn big range. Okay, so as you can see, there's a bullishness, there's a bullish bias to it. So you have to think by the time we end up down here, I mean, if history repeats itself, buying them up, you got to think anything that goes up is probably going to get sold right now. Anything that goes down will probably get bought right now. All right. So what I don't want to do is take that short off the high, find that, you get it, right? That new channel. I don't want to get caught. I don't want you to get caught taking that trade. Right? I don't want you to get caught with this move going over here thinking, oh, I'm going to short this thing right now, and whoop, it goes right back up into that trading range again. Okay? So that's the trap that I think we really want to make sure we avoid for tomorrow. Okay? So I know there's a lot on this chart to consider. If we go higher here, right? If we go higher, again, I think this trend line is going to be your best friend, right? You can try to play around with some trap up here, if you want to kind of gamble a little bit, right? Get a little trap up there, right? But I'll be waiting for that down, up, and go, right? That down, up, and go. Notice how I say that, right? I'm not looking for it like this. You should not need a magnifying glass to see that breakout pullback right there, right? If it does that, it's going to probably come back anyways, right? What you want to get some daylight in between the move lower and the move higher, okay? Because a lot of times what will happen is the market will get underneath it and it will grind like this. There might be a variable, you know what I mean? There might be a different trend line being used there. So I really try to stay away from the really small breakout pullbacks. I try to get some daylight, right? I want to see it down, find some daylight there, and then grab that short from there. Now, what would really make us happy right now is if we could get this thing to pop back up before we get, right, again, to the other side of the range. I'm not doing a very good job at drawing this right now, right? We go up, we get through it, right? And we get that short going lower. What I've got to do is I've got to remember I've got to get that re-entry, right? We can sell off the trend line. I've got to get that re-entry before we get down to that low of that range, right? That's going to be the real key on this. Okay, what may happen as well, is the market may go up like this. It may take off the downside and really run. If it takes off the downside like that, remember, you want to get that pop up, really get above that moving average, trap in those bulls and finish it off there. All right, so if it really, if it just takes off the downside like that, everybody is going to want to short this thing, but you're not going to want to chase after it. Right, so what I'll do is find like a bigger channel here, right? Just try to get it to pop up, and sell off that high. It may not be that easy, right? Just be aware though. If we can get it, that trend line is your best friend. What I don't want you to do though, again, is I don't want you to fall for that, right? For that big run down and go perfect. We get this big pendulum swing down here. It's probably not going to be there. It'll probably be right about there, right? That kind of 86, 87 area there. All right. So if it does just kind of crash lower here, think about that big pop up, get above that range, and again, failure, pullback combination, and go from there. All right, guys. And then as far as going higher here, as far as a breakout going higher right now, we can definitely do that. Just make sure you understand how breakouts work. The breakout leg is always the measuring leg. So for example, we have to get that 1, 2, 3 breakout, right, going higher here. That breakout leg is the measuring leg, right? So once we get that 1, 2, 3 breakout going higher, now we can drill down. We can find that, right? We can find that first test. Again, we'll drill down to our faster time frame. This is that 1, 2, 3 breakout. We find that first test. Maybe it's a failure pattern. It's a trap pattern off that low. Okay, what to remember is the size of that breakout leg, this leg right here, will be the size of that leg. Okay, remember, there's a very good chance if we see a 1, 2, 3 breakout pattern, by the time we get up there, it comes right back down again. All right, so what you want to do is you don't want to chase it as it goes higher. Right, want that first test. If we can't get in at that point, you're just not going to want to try to chase it up there, because again, it's one big range. And this could easily take out that measured move and end up dumping right back down in. I hope that makes sense. All right. So as far as these sellers go right now, right, we'd love to get up underneath go. If we can get that re-entry, right, off that channel, even better. Right. If all it does is just collapse, wait for that pop, trap in those buyers, and hit it again. We know where the objective is as we go. What if we end up on the other side of that trading range? What do we do then? Right? We look for that same nested failure. Right? We talked about this on the S&P and the Nasdaq. One option is we let it retest. We go 1, 2, a lot more aggressive. Right? Or we look for the bigger 2 try. Right? Like this one. That's how big that one is. Bigger 2 try. 1 try. 2 try. Go from there. All right. And again, if you can find a channel off that high, off that low, that's always where the best entry is. Right? We run lower, bears once, bears twice, off the channel. Right? We run lower, bears once, bears twice, off that channel. And then remember, the size that move down is the size of the objective on the other side. If we can find that new channel, grab that first test, pendulum swing is the objective. Again, a lot of this we've covered already, right? All right. Hopefully that all makes sense. I know this one's a little bit tricky here right now. Get that under, right, up and over, the down, up, right. Get some daylight on that, and then watch that, right. Watch that pendulum swing down here. If it runs higher, don't chase it, right? It's either in early on the breakout or it's nothing at all on the break higher here, right? And boy, wouldn't it make sense if we saw a 1, 2, 3 breakout, we find that new channel, grab that first test, right? They run up, they take out the measured move, and then 1, 2, right? That same crown reversal, right back down again. That's not difficult to see happening here tomorrow as well. All right? Time will tell at this point, guys. Get the roadmap ready to go. Get the plan ready to go. Now all we need is a few more hours here. Get some candlesticks coming out, and we're ready for the action. Speaking of the action, too, don't forget, guys, if you're sick of missing the best trades each day, if you've taken too many losses, too many mental mistakes, our trade room is designed for a new trader who wants to learn and earn and do it right there with me in a safe environment to make sure you're doing everything the right way. I would love to have you there trading with me tomorrow morning, every morning, 8 o'clock Eastern time. I'll put all the membership links, all the free course links, I'll put everything with you guys. Learning to trade, it's easy in theory, but it's not as easy when you're going out and doing it every day, right? Especially on your own. So our trade room's a great place for you. You can learn more in the description of the YouTube video. Don't be afraid to call the office. I'm always here. If you guys have any questions, don't be bashful about calling me here in the office. I'd love to answer any questions about brokers or data or anything that you want to talk about. Again, drop me some comments in the comments section if you got any questions down there. And I hope by now you subscribe to our YouTube channel, because I am bringing the fire here this week, this first week of February. But I'm out of here for now, though. I got to rest my vocals for tomorrow. It was a busy day here in the office. Hope you learned a lot. Hope you use it tomorrow to crush it and earn a lot. And I'll hopefully see you tomorrow morning at the opening bell. If not, we'll come back and do it again tomorrow night. Same time, same place here on Wednesday evening. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.